Welcome to the indices, and here we're looking at the US 10-year notes, and as we've been pointing out, we've been tracking 5 waves up through here. We knew that we'd have some sort of corrective pattern working across the 126, and we can see that we've got this 3-wave pattern here, and then we'll see further upside here. So the higher the notes go, the lower the stocks go. So you can see that there's going to be pressure put on the S&P 500 and other indices as well. So looking at the S&P 500, a little bit difficult to point out, but basically on the cash market, there's good volume support from this initial bounce back here at 1865 on the cash market. So 1860 here, but 1865 on the cash market is the critical point. So you want to be short if that 1865 on the cash market breaks, and put the stop at 1883 or 1877, depending on how many sort of contracts you want to get in risk exposure and whatnot. So look, there is pressure to the downside on this. The wave count is a little bit sort of unclear and messy in this particular structure, but yesterday we were looking for an ABC correction back up through to here, and we're looking for a wave 5 to move down through to here. In the Dow Jones, a little bit easier to see here on the Dow here. Basically, we're looking for, from the high up here, we got wave 1 down to here, wave 2, wave 3, and we're working through here for a wave 4. If the 16,500 found support, well, then we would be, looking for an ABC correction further upside. But because we've made a new low here, now we've got 5 waves to the downside. So this 5 waves to the downside is not complete yet. So probably 16.5 will be, 16.3 will be closer to the bull mark, because the Dow works to every 100 points very well, and if you're intraday trading, that's what you would be looking to do, trading to that 100 points all the time. Well, you can break that down into sub levels, and So the DAX tends to follow the S&P 500. So we were looking for a rally back up into the 97 area, which has occurred, and now it's showing weakness here as well. So it's got this trend line support through here, so on the daily as well. So you need to be aware of that, but. There is a switch trade set up on here that occurs at 96.14, and putting the stop above here if you're looking to short from that side there. It's a bit sort of tricky. Well, it's not really the done thing to short above and close to a large number here, but look, in a bit of a nutshell, if that 9600 here becomes the retested resistance, then you expect to see the market move down to the 95. So that's what you'd be looking at. It's all really about the Fed's comments tonight, in the next session rather, 5 a.m. in Australian time, but those Fed's comments will be the market driver for this. So in a bit of a nutshell, just going back to the Dow Jones here for a second, basically the Feds are going to support the market. They can see the economy sort of struggling somewhat, so they've got to sort of open the doors and feed it a bit. So but from this point of view, we've got this wave 1, 2, 3, 4, and this 5th wave sort of finishing down through to here. There'll be 5 waves in here. I did pull it apart. It did on the cash, and it does appear to be a bit more to come. It may not come to the 300, but sort of close at making a new low here anyway. But if the Feds come in and have a bit of a yak, then it's likely to see a rally from this point here. So because after 5 waves down, 1, 2, 3, 4, 5, then we'll get a 1, 2, 3 ABC counter trend, and then further down. So yeah, we can expect to see bounce on, as we normally do on Wednesdays and Thursdays. You get those swing days, ones that take out your stops. So and normally try and trade from Friday right through till Tuesday in a particular trend is the norm. It runs quite smooth from those points. And the FTSE. Same really. We'd been counting, 5 waves up from, say, from the 6.5, the medium level here, a bit like the Dow Jones at the 16,500. The 65 is a medium level, but basically counting, and trading all the way up through to here, and then just sort of chilling out and working out what we've got. And look, so far, this particular move down through here, look, it can be counted bearish, I don't deny that, but it also can be counted corrective in terms of an A wave, and then an A and a B and a C for the B wave, and then 5 waves down for the C wave that will finish just down here a bit lower. Now, of course, that can open up to a bigger bear picture, but while it's there, an ABC pattern, then I'll just sort of keep it there for the time being, because if the Feds come in and make their comments and these markets sort of bounce back, well then, it's good to be aware of what we're actually got here as well. I mean, of course, the the indicators are giving you sell signals, and rightfully so. You should be short, and you can see that there's a small retest of the 68 there, and the more that gets retested, then as resistance, then the pressure is to the downside. The sub levels in here, of course, are 67, 80, 72, and 65. So 72 as a retested resistance would see further downside as well. As I mentioned in the report yesterday, you need to be on the short side. The ASX 200, a little bit sort of, look, anyway, basically, yesterday we were looking for resistance at 5430 here. So I'll just go into that here. This is what we were looking for yesterday, resistance here as a wave 4, and then moving down for a wave 5 here. Now, if this low here gets taken out, this little one just here, then we've got a bearish picture still unfolding to the downside here. The 54 is a line in the sand, support on top of that keeps it positive, at least for the short time. The futures market is lower than the cash market by 18 points, 20 points. So we're going to see that sort of softer opening there, and we possibly see this taken out. So if I have a look at this on just a sort of 5-minute chart here, the move down through here, if you can bear with me a bit, is the 1, 2, 3, the 4, and the 5 here. So there's a 5-wave sequence here. So this can be counted as an A and a B and a C here, and it can move up from here, okay? However, if you see this occur, where we've got down 1, 2, 3rd wave here, 4th wave, and a 5th wave here, and taking out this low here, then you've got 5 waves here, okay? But as it stands here, and if you see if this market pushes up from here, then you can look at that high being taken out here, okay? So that's an interesting sort of point, really. This market, you've got to watch the morning squeeze, which is normally done by, say, 10:15 anyway, It's just that in the futures market, everybody can see, well, not everybody, but affiliated associate members of the ASX exchange, who owns the Sydney Futures Exchange now, they can basically see where all the orders are sitting. And well, they know how many contracts on the futures are coming into the market. So if 500 come in there, they can soak those 500 up, push those stops out, and take the profit on the squeeze, and then get the market to head in the right direction. So you may see a squeeze back into the 5400 before you see a move to the downside. But like I say, that's normally done by once the ASX is alphabetically opened, and Westpac has been done. So normally run from that point. Alrighty, I think that's it. All right, cheers.